Hi, everyone, and welcome to Mish's Market Minute. My name is Mish Schneider, once again hosted by StockCharts TV, and as always have a full schedule and a theme for you. So I thought for today we would explore all things electricity, or the investments that we might be able to make in electricity. As you are well aware of, electric vehicles have been all the rage and will continue to be all the rage. And even though it might be some 20 years before we see no more oil and gas cars on the road, there are still great opportunities that have emerged out of it. And most recently, Elon Musk said that electric vehicles will double the global electricity demand over the course of time. Think about that. Doubling the global electricity demand. Can we actually provide all that electricity? That's what got me interested in this whole topic. So what I thought I would do is look up, and I did some Googling here, what are electric vehicle infrastructure investments that we can make. And what was interesting was I found everything from people that actually create the electricity, carry the electricity. Some of them were over-the-counter stock. Some of them are oil and gas companies that are providing electricity. There was a myriad, so I'm not going to categorize them or put them in any particular order, but here's the list of stocks if you want to go back. And of course, I'm going to start with Tesla because why not? Tesla, of course, being the kingpin of the electric vehicle, which on Thursday, as I was recording this video, is tackling once again that 600 area. Okay, so let's start here with Tesla and look at this stock. And of course, what I'm going to show you is our two ACP plugins, the market gauge leadership and also the market gauge real motion. As you know, on the StockCharts website, you will be able to find the tutorials that Keith Schneider, my husband, did for you guys over the last couple of weeks. Very informative and very important to know. I give you a cursory explanation, but really if you want to dig down, that's the way to go, is to watch Keith's videos. Okay, so let's look at Tesla. So of course, if we're looking at the leadership here, then we're looking at the price performance against the benchmark, and you can see that it's just outperforming here, our benchmark. And if we go down here to the real motion, what you can see this interesting though, is that the momentum from where we were trading up at this price here, where we made a new high, which was higher, we're close to that price, but the momentum isn't that great. Now, what's so interesting about the Tesla stock is that some of the biggest shorts that were persistently short finally threw in the towel. We have investors like Warren Buffett, long Tesla. But I did read today that the guy who was the big short guy, and I can't think of his name, but the guy who predicted the mortgage debacle 2 years before it actually happened, is now short Tesla. But you got to take that information, and you can't trade off of that information. All you can trade off of are what's going on now. Maybe in 2 years from now, he'll be right. But for now, and I mention this because this actually held exactly where it needed to on its most recent correction, after its upgrade, after it's now going into the S&P 500 on December 21st. It'll be interesting to see how that responds to it. But right now, 600 is a big area right here. And so what you want to look at is 540. To me, that's the bottom line in terms of support. It breaks down this low, by the way, the other day was 541. It breaks down under that 540 level. I would be more cautious. But for now, over 600, who knows where it can go. So I just wanted to show you that as sort of the overall theme, considering it was Elon and Tesla that really has put the whole electric vehicle space on the map. So now let's look at the first company. This is an industrial machinery company that's helping with the creation of electricity. And forgive me if I don't have all the fundamentals down in my head. You can always look up ABB Limited yourself to see exactly what they do. We're going to just look at pure price. So what we see here, first of all, is in terms of leadership, it's not leading. It's actually underperforming. In terms of momentum, it's really over the 50-day moving average and over the 200, just like it is on the chart, but the momentum isn't wowing us right now. I wouldn't say it's a big divergence, but it's definitely just sort of languishing here. So what's interesting about this particular stock is that what we have is a good line in the sand, or this 50-day moving average at 26.28. So I would say, looking at this, what you want to do is have a stop with a little bit of fudge room, maybe under 26. And you can see here, this may not be the most heavily invested stock in terms of volume, but you can see that on Thursday, this was starting to clear a lot of the resistance. And with this resistance right now, you really want to see this get through, let's say, a close over 27, especially as we end the week. And then you have about $1 risk to see if this thing can actually continue to move up. As you can see, it traded up to around 28. So the next stock is British Petroleum, actually, or BP Amoco is what it's called. And again, this is one of the premier companies that is now providing electricity, and particularly could be what Elon Musk is referring to as it tries to meet the global demand, which will continue to rise over time. So what we have here, if we look first at the leadership, is that it's doing pretty good. It's actually outperforming the benchmark. And if we look at the momentum, the momentum is starting to clear over the momentum of the last time it had a peak high here. And if you look at the moving averages, it's clearing this 200-day moving average. Now, the whole oil and gas space has gone up, but I don't know if people necessarily understand that part of the energy space and the oil and gas space is devoted to the electric vehicle. We think of it as the dinosaur related to oil. So I found that to be incredibly enlightening, even to me. I learned something as well as I was researching for you guys. Now, as far as the actual stock on this one, you need 2 closes over this 200 to get excited. So right now you can see the 200 comes in at 21.20. It's the green line. I always represent it as the green line. And so today's low, if we take a look at that, is also, you can see it up here on my screen, today's low is 21.05. So I would say somewhere under maybe the 10-day moving average and this low right here, or somewhere around 19, because this is a bigger stock, would be a good risk if we get the week to close out on Friday, when you'll be hearing this, over that 21.20. Then it might be an interesting $2 risk to see if you can get $4, or to see if you can get a move, let's say, up to 25, which is where it was trading back here in June. And the whole oil industry, as it's basing out, could be very interesting as well, just in general. So there you go. Now, the next one is Shell. Royal Dutch Shell is big now into trying to provide electricity and continuing to do so. And so here we have a chart that looks like it's already broken out. So the question is, if we look back and see what's happening here, what we can see is back in April, when the whole market was recovering post-pandemic, it got up to about 39 before it started to fail. Then on its next peak high, it got up to 38.50, so a lower high. This last peak high has been at 37.23. So you're making lower highs. And you could actually almost put a trend line here connecting these 3 highs, which I'm not going to do for you right now. But if you look at that, you can see that if it takes out that trend line and starts to take out this high at 37.23, you could actually see this go up further. What am I seeing support that? We'll go back to risk in a moment. Is A, it's showing market leadership, and B, the momentum is doing very, very well in terms of the real motion. So if I were to get long up around that 37.23 level and above on the breakout, or even over 37, again, that 10-day moving average offers us an opportunity to find a decent risk. So one would be under 33.75, but if you wanted to play it really tighter, I would use under this low here at 34.89. And then again, with a big stock, you can have a big move here. And if I just scrunch this up, I can't do that. If you go back in time, you'll see where this stock was trading much higher at one point. Next stock is Net Energy. Next Era Energy, excuse me. This one actually is selling off a little bit, but they're also big into the conventional electricity space. They are actually a utility. And utilities are something that I am now looking at as a result of what I read when Musk made that statement, because utility companies provide electricity. Now, of course, they're mostly providing electricity for people's homes and businesses, but how that emerges and evolves, I think is just something to keep track of. So right now, what we're seeing is a well underperformance, and we're seeing the momentum in line with what's happening in the price as it's breaking down under the 50-day moving average. So what I would look for here is some other level of price support. And you can see that we had support coming in right around this low right here at around 72. So I would let this one go, but I'd keep an eye on it. And this, by the way, is also interest rate sensitive, but the TLTs and the yields are actually coming down a bit today. And you can see that if this takes out the 10-day moving average here, and gets back over, let's say 74.50 for a couple of days, then you could actually use this low as a risk, or the low of 72.91. So when something is trading so close to the moving average, and especially when you're seeing the slope pointing down on this 10-day moving average, even if the 50 is still up, tells you this is not ready to trade. But nonetheless, it's a big company, and I thought it would be one that would be good to share. The next one is also a big company, and that's Duke Energy. Looks a little bit different than what we just saw. Now again though, look how it's underperforming the benchmark. In terms of the momentum, it's no divergence. It's come off, but it's certainly not showing any great divergence here. And in terms of the price, we're getting closer to the 50-day moving average. And just the opposite of what I showed you before, where we had higher lows, lower highs. This time now we have higher lows. And so here we had one low at 88.73, another low at 90.01, and then this most recent low at 91.91. That always is interesting to me. So what we want to see now is this to show a little bit new leadership. What I like is this high here at 94.64 corresponds here with the open and the closing levels that we see here at around 94.63. So maybe through 95, that would be something to be taking a look at as well. But again, I think I've shown you ones that I like a little bit better, but nonetheless, this is another big company to keep an eye on, and the whole space is something to keep an eye on. So now let's go on to the next one. BEP, as you can see, it's another utility that deals with conventional electricity. Now, interesting, this also had already made a pop. A lot of these seem to be following some of the other electric car stocks, although most of them are up at this point. Ford's doing well, General Electric doing well. NIO, of course, is having a little issues because it's one of the potential Chinese delisted stocks that Trump was supposed to sign into action. But nonetheless, this actually now has an interesting sort of double top. Now, that doesn't mean that I would necessarily be looking at a short, but I would certainly be seeing if it doesn't hold this inside day on Thursday and breaks down under this low right here, then I would be looking for that move down to the 50-day moving average. And you can see it's really going kind of neck and neck with the SPY, and also coming down in momentum closer to the 50 than it is in price. But this is another one I think that's going to be a very interesting stock to look at, and this is a stock that actually trades and actually moves. And again, I've given you a couple of more specific actionable information, but I wanted to really introduce you to the world here of these particular stocks. And here's another one. This is the Southern Company, another utility company. This one looks better than the one we just saw. This one here is still underperforming the benchmark, but the momentum doesn't look too bad. In fact, the momentum looks pretty darn good, particularly if it holds this Bollinger Band here. So now, here we have the 50-day moving average with a sharp slope up. We have it clearing the 10-day moving average. And even though it's just kind of sitting right here, I would say that this would be something I would rather be looking at buying somewhere closer to around 61 with a stop under the 50-day moving average. Or conversely, if it moves up and takes out not just this high, but the low of this day, which is 62.34, so figure around 62.50, then I would probably be using a risk down to the low from this day right here, or under 60. So I really don't want to risk more in any of these, anywhere from $1 to $3. That's about it. But nonetheless, if you get them right on the ones that I feel are the most worthwhile, then you can definitely at least try to double your money. And as you know, if we're looking at 2 to 1 for the first profit target, particularly with the market so high, that's not a bad way to start. Or at the very least, go to a no loss stop if you get the 2 to 1. All right, next up is XLU, the actual utility ETF. This is the one that I've been tracking. What's interesting to me right now is look how it's just squeezed. It's squeezed between the 10 and the 50-day moving average. And you're getting an inside day after this had two bottoms here very close together at 62.58, this one being at 62.59, and an inside day. To me, that makes it easy. If it clears over the high of yesterday, and I'll give it a little bit of room, say 64, then you have a couple of choices. Now, let's take a look here before we finish that thought. It's well underperforming, number one, and yet it's holding the 50-day, so it has a little bit of a positive divergence, not much, on the real motion. If it breaks down under the 50, of course, that will go away. Obviously, if this breaks down below 52.58, you want to stay away from the stock. But if it can clear this 64 level that I'm talking about here, and the high this day, by the way, is 63.73 again, then I think you can have, again, about a couple of dollar risk. There is an exponential moving average, which you can't see on the weekly chart, that comes in around 61. At most, I would risk the $3. Do I think that you can get $6 from 64 up to 71? Well, this one high right here was 67.83, so you'd be looking for a new multi-month high on these things. And of course, these are all very possible. Now, I'm going to give you one that's actually an over-the-counter stock. The last time I gave you one of these was GBTC. Well, we know that worked out pretty good. SBGSY, Schneider Electric, is another one to be looking at. Yeah, I don't own the company, by the way, full disclosure. Wish I did. But this is also underperforming the benchmark, coming down to support here in the real motion indicator while we're pretty far from the 50-day moving average. So this one is not ready to go. The only thing I could say about the chart that looks most interesting to me is you see we had a gap up here from this day to this day. Now that gap is holding, so you really don't want to see this break down under 26.99 or 27. So at this point right now, I would probably either wait to see if it does break down, what happens closer to the 50 or around 26.27, or let's have it show some strength, like clear that 10-day moving average, which it hasn't been above in a few days, at 28.10, and then you can risk down to around 27, right above where that gap would be, so that this way you would have another opportunity to take a look at it. Basically, none of these that I'm showing you, these last few ones, look incredible, but they're all consolidating after making good moves. That means most likely they're ready to go back up again. It's just a matter of timing. The next one that we have here, LNT, is Alliant Energy Company. Now this again looks a little bit different, but again, it's another utility company trading under the 50. So what we want to see with this is the real motion to start increasing in momentum. It hasn't yet. So those of you who have the ACP plugin can track this one. If it can clear over the 50 here, then clear over the 50 here, which by the way, you can see is sloping up, then you have all this consolidation as a jumping off point to look at. So that's another one I would keep my eyes on here. At this point now, I don't see much. It's just chopping around and I don't see a particular trade, but that could change. And that's why it's so great to have those momentum indicators along with the actual price indicator. Okay, next one is PCG. This is another conventional utility company. And look how great this one looks. This was PG&E, and this is having an inside day right under the 10, outperforming, momentum looking good. So this is a pretty simple one to me. This would be one that I would say, yes, gets a check mark. Over 1269, so let's call it 1270, today's high being 1268, you're getting an inside day. Over 1270, you can take a look at this one. And where would be a good risk on this? I'd probably say, once again, we have a gap up here. The high this day was 1192, so I may make it 1195 or 1194 as my risk right before it fills the gap, because you don't want it to do that. So that would be another one that's worth looking at right there. That's one of the bigger companies. FPL. Now this is looking at, this is a different type of stock. This is a trust, and this is an energy fund. And this one, look at that, outperforming, momentum is great, and the momentum is rising before the price takes out this recent high that we had right here. at 456. Now, this is a small stock here, today's high being 456. Look at that. That makes that pretty clean. Gets through 456. Momentum is showing strong on this one. You can buy it over 456, and really, you could just use these lows here as a risk. That would be like right under 430. I would probably say take it down a little bit, maybe make it 424. I don't like round numbers. I like odd numbers, or under 425 or 424 type of stop. I like that one. That one's not bad. Now, it's a small stock, so it may take a while. Now, we're going into a different type of company, and these are consumer discretionary companies that deal with electricity also. I looked all of this up on Google before I did this with you. Certainly outperforming, came off along with the price showing no divergence, actually showing some support here on the real motion. And again, through 25 or through that 10-day moving average could be interesting. No particular gap here, but you do have some good support at this low, at 1880, this low, at 1875. So again, I would use maybe more like an 1869 type of stop if it can get through 25. Now, that seems like a big risk, but this is a big moving stock. So that would be another one that could look pretty interesting to keep your eye on. And a couple of more. We have Southwest Energy. This also has come down, but look, I like the way this is moving up and down, up and down, up and down, respecting the 50, or at least trying to, underperforming under the 50. So this is another one that I would put on the radar, wait for this to clear back over the 50-day in momentum, and then get a confirmed buy signal by holding the 50. Right now, it's looking like it's breaking down. And then you have this 200-day moving average. Now, this is a tiny stock, though. It's a $2 stock. Two more, ABB. This is another one kind of similar in the industrial machinery, dealing with electricity and getting electricity distributed for recharging cars. This also is a bigger stock, underperforming, just now starting to clear the 50. So we're seeing a little bit of a negative divergence as the price is over the 50. This one here has a gap to fill to this low, 27.53. I might wait for that to get filled and then have a better look at it. And then you can use the 50-day moving average as a potential stop area. And the last one here is BEEM, B-E-E-M. This also is doing specialty financing here. And right now, you can see that it had a move down on Thursday. It gapped back over the 10-day moving average. So if this one actually holds here at this, let's look at today's low, at 30.45, this could be another one to be looking at. Probably would use a stop somewhere under this low, under 26.69. So you're looking at about a $3 risk. Again, I don't want to risk too much unless it's a much bigger stop. And I would take a smaller position and maybe add to it over 35. Momentum is holding, although it's come off. It's still outperforming. This may be one of the better ones that we've looked at so far today. So I hope that was helpful to you and gives you just a list of things to look at. It's always good to have a radar list of electricity stocks to watch as we go forward. And again, it could be an interesting space, especially as Elon Musk says, as the global electricity demand continues to grow. Okay, that's it for now. Thank you so much for watching. You all have a great day. Bye for now.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.